Life insurance companies have a proven track record of 170 plus years of managing risk, right? And their first goal is preservation of capital, period. There's literally no other financial product on the face of the earth that's going to get you a better long-term rate of return with the same guarantees and liquidity, and that's a key part, than whole life insurance. I'm not sure if you realize this or not, but there's normally a trade-off in the financial world. Guarantees with financial products typically mean that they're not liquid assets. Think of products like bonds, right? Now, a properly designed whole life insurance policy will allow you to replace your savings account, protect your money versus inflation, give you an emergency fund, provide liquidity to opportunity, and help you increase the financial efficiency in your life. Period. Hey, what's going on, cash flow hackers? It's Chris with Life 180, and for this video, we're going to be talking about infinite banking. I'm going to do an overview on infinite banking. What is it? Who is it right for? Where are the pitfalls? How can you leverage it in your life? And my goal is to do the most comprehensive overview of infinite banking that I've done to this point. So before I get into anything else, I want to talk about what is infinite banking for all the new people. There's a gentleman, his name is Nelson Nash. Now, sadly, he passed away a couple years ago, but Nelson Nash actually created the concept of infinite banking in the early 1980s. Now, Nash was a follower of the Austrian School of Economics. So Nelson saw that there were a lot of pitfalls in the current financial construct in the US, right? Being a follower of Austrian economics. And he realized that many people were often getting into financial trouble due to the reliance on banking institutions. So becoming your own banker, he thought, would put you in control of your financial future. However, there was a problem with that, right? Because if in order for infinite banking to work and for you to become your own banker, you're actually going to have your own bank. So that's not the easiest solution on the surface, as there aren't a lot of people out there that can actually afford to buy a bank. So where does whole life insurance come into play? Now, Nelson Nash discovered that the best financial tool to use for infinite banking was in fact whole life insurance, because obviously people couldn't afford to buy their own banks. And the other thing I'd say to this is that it's important to know that this isn't something that Nelson Nash created. So whole life insurance has been used by banks as a tier 1 financial asset for over a century at this point in time. In fact, the Wharton School of Business used to teach a business class on how to use cash value life insurance policies to fund business expenses, entrepreneurial ventures, investment opportunities, purchasing real estate, eliminating debt, and a lot more. The idea of using whole life insurance to become your own banker is not a new revelation, but what was new in the 80s is when Nelson Nash created the term infinite banking, and he utilized it to market whole life insurance in a way that had never been marketed before. So it's important to know that you're going to see all sorts of names for infinite banking around the internet. Since the 1980s, there's been a lot of people, a lot of companies, organizations, marketing organizations that have tried to spin off their own version of it. You're going to see things like cash flow banking, bank on yourself, circle of wealth, leap, velocity banking, and there's a lot more than that, but the purpose of this video isn't to get into all the competition, but it's important to know that not all of them are exactly the same as infinite banking, but all of them did stem off of Nelson Nash's original concept of infinite banking and utilizing whole life insurance. So it's important to understand. So most people don't realize this, but there are many ways to design a whole life insurance policy. Well, a participating mutually held life insurance company treats its policyholders like shareholders are treated in a publicly traded stock company. And while you probably never thought about that before, it's really powerful because you as the policyholder are actually participating in the profits of a life insurance company, right? Now, every policy with one of these companies grows in 3 different ways. 1, you contribute, i.e. you're saving into the policy. 2, you earn interest, which is a guaranteed interest rate inside of the policy. And 3, you earn a dividend, right? They pay you dividends every year. Now, while dividends aren't guaranteed, it's important to note that any company that you would want to consider using for an infinite banking policy has never, and I'm going to say that again, has never missed a dividend payment in 120 plus years. Yes, you heard that correctly, 120 plus years. So the way I look at it is, even though they're not guaranteed, you could pretty much take it to the bank, no pun intended. So life insurance companies have a proven track record of 170 plus years of managing risk, right? And their first goal is preservation of capital, period. There's literally no other financial product on the face of the earth that's going to get you a better long-term rate of return with the same guarantees and liquidity, and that's a key part, than whole life insurance. I'm not sure if you realize this or not, but there's normally a trade-off in the financial world. Guarantees with financial products typically mean that they're not liquid assets. Think of products like bonds, right? Now, a properly designed whole life insurance policy will allow you to replace your savings account, protect your money versus inflation, give you an emergency fund, provide liquidity to opportunity, and help you increase the financial efficiency in your life, period. In short, it's all about control. Every whole life insurance policy offers a policy loan provision to it, meaning you can leverage whole life insurance as a tier 1 asset in your life the same way that banks do. As your whole life policy increases in value through savings, guaranteed returns, and dividends, like I talked about before, a high percentage of that money is contractually available for you to access. And this money can be used for emergency, opportunity, debt elimination, real estate, and all these different things. Essentially, all of the things that the Wharton School was teaching back in the 1950s in their business class. It's also important to note, and this is a key component to this, that when you access your money, you're never really taking your own money. You're just borrowing against your money or collateralizing your money, utilizing your money as collateral. And it's a big difference there, because if you're borrowing against your money and you're not borrowing your own money, then it starts to make a little more sense, because what happens is when you borrow against it and you collateralize your money will continue to grow on a guaranteed basis. At Life 180, one of the things that I advocate for is people having 12 to 24 months of living expenses in a whole life insurance policy before investing anywhere else. And I do that because this is the most certain way to set yourself up for success and eliminate all the other risks. And as you save more money and your account grows, then you can start to utilize that cash for cash flow investments like real estate. And that's actually one of the reasons I wrote this book called Cash Flow Hacking. It's how to leverage this strategy to be able to invest for cash flow like real estate and be able to reach your financial objectives faster. When you use whole life insurance for infinite banking, you effectively create a self-completing plan. What I mean by that is because it is life insurance, there's naturally a death benefit that accompanies the strategy. Now, while we don't design policies and we don't optimize for death benefit, we're always optimizing for cash efficiency and cash growth. Think about it this way. If you save money in a savings account and you somehow pass away or something tragic happens to you, that money in your savings account is going to pass to your heirs. But what if you were saving for something like college or a business? Or what if you were trying to save for your first real estate property in a portfolio? Your demise in that situation ends your mission and you leave your children and your spouse without reaching your desired goals. On the flip side, if you use whole life insurance as your savings vehicle and you meet your demise, your plan self-completes with the life insurance. College will be paid for your kids, or your spouse can continue the real estate investment dream, depending on what's important to them, right? And ultimately, they could even do it faster if that's what they want to, because that life insurance, once again, will be self-completing. This is one of the reasons that I say that a properly designed whole life insurance policy is the only way to guarantee that what you want to happen will happen when you want it to happen, whether you're here to see it or not. So a question I get all the time is, who is this best for? Now, utilizing a whole life insurance policy is best for entrepreneurs, real estate investors, day traders, or anybody who understands the value of control of their own money. If you think that saving money for the long haul is a broken system that won't get you where you want to go, you probably want to look into infinite banking. But here's the deal. There are a couple downsides to it, and I want to be totally upfront about what those downsides are. So if you're considering infinite banking, it's important to note a couple things. First off, you need to qualify because it is life insurance. So in order to play ball, you need to qualify for yourself, or you have to have insurable interest on somebody else like a business partner or a spouse. That's important to understand. Second, there is a capitalization phase to a policy, right? So you need to think more long-term, and that's where a lot of people have a hard time with this. So you're going to lose anywhere between 10 and 40% short-term liquidity of your money in year one. And that's depending on how you fund it, depending on what your objectives are. There are different ways to handle that. But just let's talk a range of 10 to 40% of loss of liquidity year one. Now, after year one, it gets dramatically better. So effectively, while you're a little behind in year one, when you look at the mid to long-term benefits and growth, it really still is a no-brainer as far as your safe money goes. In summary, the main reason I'm such a proponent of utilizing infinite banking is because this strategy puts you in control of the results of your financial life. Now, we've all heard about building a castle on sand rather than the foundation of stone, right? That old biblical concept, right? Traditional buy and hold planning has proven to be a foundation of sand. That's one of the reasons I call it the greatest failed financial experiment of all time. Most people don't realize this. Qualified accounts, Roths were not created until 1998, 401ks in the early 1980s. And it can look good for a while, even as long as 10 to 15 years. But when the wave comes in and you have your whole financial life built on sand, when that wave pulls out, it's going to pull everything with it, and you're going to have to start building back up from scratch. By using infinite banking as a strategy and putting whole life insurance as the foundation of your financial life, it's like you're building on a foundation of stone by utilizing these principles. Because remember, it's not just about having the whole life insurance policy, it's about the rules and the financial system that accompany that policy. Now, it can set you up for success in your business. It can open opportunity for real estate investing, and it can even provide stability in retirement, using it as a volatility buffer to protect your other investments that you likely have on some capacity. At the end of the day, I believe that every single person in the world should do this on some level. And the bottom line is, you don't need to be rich to do this. I hear this all the time. I get this question all the time. I want to tell you right now, you don't need tens of thousands of dollars. Now, the more you have, the better off you are when you follow the certain set of rules. And I did a video called the Life 180 Pyramid. You can look at it above. But the bottom line is, I always tell people, you simply need to get started, even if it's only with a couple $100s per month. Once your finances allow you to do more, you can absolutely add more to the plan. So if you're interested in getting started and seeing how infinite banking might work in your life, I would encourage you to go down below, click on the link in the description below, or just go to life180.com. You could set up a free call with one of our financial efficiency coaches. Once again, this is a no obligation call. It's not a sales call. The real goal is to be able to figure out how we can answer your questions to see if this is a good fit for you and your life, period. That's it. So anyway, I hope you found value in this. If you did, please click that subscribe button. Make sure you click the bell. That way you get notified every single time I launch a new video. Got tons of other content on infinite banking, on utilizing life insurance as an asset. If you're into real estate investing, if you're into business, if you're into day trading, if you're into any of this stuff and you're interested in learning how to use the infinite banking, make sure you check out the infinite banking playlist. I really encourage you to do that. It will really educate you on everything you need to know about infinite banking, and potentially, when you get into calls with anybody, you're going to come more prepared, because I'm a big believer nobody should invest in anything that they don't understand. So anyway, hope you have a blessed, inspirational day. Look forward to seeing you around. Take care.